Fed Vice Chair for Supervision Michael Barr today outlined regulators' revised proposals for Wall Street banks after industry pushback.
It is critical that banks have the capacity to continue lending to households and businesses through times of stress. Bank capital is a key component of this resilience, and bank capital rules help to ensure that banks are holding capital commensurate with the risks of their activities and the risks that they pose to the U.S. financial system.
So under the new rules, capital requirements for the nation's biggest banks would increase 9%. That's less than half of what was originally proposed. Still, many on Wall Street are dissatisfied with the revised proposal, including our next guest. With us now to discuss, let's bring in Chris Whalen, who is the Whalen Global Advisors Chairman. Chris, thanks so much for taking the time here. So you think it shouldn't have gone this far. Why is that?
The whole focus of Basel is on capital, which is what it's been focused on for 30 years. I think they should have focused more on things like market risk. Silicon Valley Bank, for example, is a case in point. And so, the Fed was caught flat-footed when the industry pushed back. And then since that time, we've had the Supreme Court decision in Roper, which essentially eviscerated any notion of deference to federal regulators. So if the rule is not supported explicitly in the statute passed by Congress, then the federal regulator is vulnerable to losing in court if the industry chooses to sue them. You have a case right now where the industry is probably going to sue the Fed and the other regulators on a rule regarding brokered deposits. You may also see the mortgage industry sue the Consumer Financial Protection Bureau over a revision to the regulations for mortgage servicing. So, the Supreme Court decision has changed the landscape, and the Fed knows it. The Basel process in particular is very vulnerable because it's not really enshrined in U.S. law. It's an understanding among finance ministers that goes back almost 4 decades. More than that, really. And it doesn't have any basis in statute. So if JP Morgan decides to sue them over Basel, they'll probably win.
No, it's interesting there, Chris. A lot to get into. I guess my first question is, even though this is watered down, I know you don't agree with it. You're saying it doesn't address some of the risks or it doesn't address the issues that need to be addressed. But what we have here, how big of a challenge is this going to be, given the fact that we did see this watered down version versus what had already been priced in?
Well, the capital piece that you just referred to in that piece from Barr is a big part of it. The large banks were not happy seeing a 25% increase in capital because they don't need it. These banks are giving back capital to investors every quarter. In fact, they would like to give back more. The banks are under-levered in terms of opportunities. And most of the new business expansion, where has it gone? Non-bank finance. You guys have been watching that process along with me for the past 5 years. So I think that the regulators are still not looking forward to future risk. They're looking behind. And there's so much detail that has not been addressed yet by Vice Chairman Barr and his comments that I think the industry would like to see the Fed junk this entire proposal and repropose it. The Republicans in the House have already said that. And I think if you see Trump win, this whole Basel rule process is going to go by the wayside, and we're probably going to start again. I have said for a long time the U.S. should withdraw from Basel. There are so many points of friction between Europeans and the U.S., particularly in areas like housing finance, that I just don't understand why we're trying to make our banks fit into their world, which is very different.
Chris, what do you think
is about government finance, basically.
What do you think it would look like then more specifically under Trump? Is he any of that?
I think you would probably leave capital rules where they are.
Yeah.
I think that you would see less effort, led mostly by the Yellen Treasury, to limit banks lending to non-bank financial companies. There's a big proposal buried inside Basel that has not gotten much media attention, but it would severely hurt the residential mortgage sector. So there's a lot of pieces to this that don't make sense. And just reproposing it, I think might not be adequate. I still think you might see the industry fight, believe it or not.
I mean, Yellen probably is not going to be there most likely as well. So
No.
this would be under a different Treasury Secretary most likely. There's much more to this
Yes.
conversation. Chris, we got to leave things there on the day. Chris Whalen, who's the Whaling
Have a great
Global
day.
Advisors. You too, Advisors Chairman. Appreciate it. We've got all your markets action ahead. Stay tuned. You're watching Catalysts.
Two years after the CHIPS Act passed, the Biden administration has invested roughly $34 billion in building out the U.S. semiconductor manufacturing sites. But China is moving quickly to ramp up their own capacity, importing more semiconductor equipment than any other country this year. To discuss where things stand, we want to bring in the architect of the CHIPS Act, Ronnie Chatterji. It's great to have you back on the program here with us, a former White House CHIPS coordinator and a professor of business and public policy at Duke University. Ronnie, it's great to see you. So I guess as we lead up to the debate tonight, looking ahead to November elections, I'm curious just to get your assessment on where things stand, given the money that's been deployed and given the future growth that we are expected to see from some of those larger names like Intel.
Well, it's great to be here. I think 2 years on, you have $30 billion over roughly 15 projects across many different states. So the government's done a great job in terms of making the announcements, these preliminary memorandums of terms they've reached with all these different companies. And they've done a good job of getting the major players in there. That was a big question early on. But you're seeing that now with Intel, with Samsung, with Micron, with SK Hynix and TSMC. We're the only geography in the world that has the top 5 advanced logic and memory producers all in the same place. So that stuff's gone really, really well. I think what you got to watch going forward is the cyclicality of the chip industry, something you talked about in this show before, how that affects the government strategy going forward. I doubt it'll come up on the debate. It's a little wonky, but it's going to be really important to watch over the next 4 years.
Yeah, we're going to be talking about that for sure in a hot second here. But when you think about the future cycles of chip purchases as well, I mean, you have companies like NVIDIA talking about million chip data centers. You had Oracle in their earnings yesterday talking about needing nuclear reactors to power data centers in the future as well, and they're already breaking ground and ready to design one. So what does that signal to you about just the type of purchases, at least a new baseline that we should expect for chips purchases from this point forward?
Well, I think the AI infra that which you're talking about is huge. And you're seeing companies from the hyperscalers on down making massive investments in AI infrastructure. And that includes data centers and GPUs, and as you note, the energy to power them. And we're still figuring out some of these deep technology problems in terms of how we're going to power the data centers we're going to need in the future. I see that as really positive for the chips industry. I mean, honestly, we needed the CHIPS Act before the AI boom. And now with the AI boom, we're going to have a chance to participate in manufacturing some of those high-end chips here in the United States. So I see it as both a great tailwind for the industry, but also a really important sort of goal for the U.S. government to make sure that the U.S. plays a role in manufacturing those chips. And that's what I see happening in the future.
You know, there has been some reports and some covering just in terms of some of the uncertainties surrounding when the money is going to be delivered specifically here to Intel facing this unclear path here to some of the biggest awards from the subsidiary program. I'm curious just to get your perspective on that and maybe what that would ultimately, or the challenge that then poses to Intel here, at least in the near term.
Yeah, the good thing from the CHIPS program perspective is it's a diversified bet. You have TSMC, Samsung, and Intel, all at the leading edge, all who've received PMTs, these preliminary memorandums of terms, to get the money. But the money hasn't come out yet, and that allows the government to use milestones and tranching to make sure that if you're not hitting those commercial or technical milestones, you don't get the money that you were supposed to get. And I think that's really going to be the key thing to watch going forward. You know, Intel has a big board meeting coming up in September. They've still publicly committed to hitting their technological and product milestones. That's going to be a big story to watch. And TSMC has reported they've reached some yields that are really close to what they get in Taiwan out of their Arizona fab. And many people weren't expecting that. So you're going to see positive news, you're going to see negative news. In this kind of industry, it's really important to have a lot of options. And you see that with the U.S. chip strategy. Watch those projects in Texas, in Arizona, in Ohio, in upstate New York. They're all going to have ups and downs over the next 10 years. But at the end of the day, we're going to be producing more chips in the United States than we were before, particularly on the most advanced nodes.
And then for the globalization and the partnership efforts on those chips, I mean, do you think, especially as we're looking forward to tonight's debate to see what business themes are discussed, chips could be one of those. To what extent do you think a deglobalization effort on one side of the aisle versus maybe kind of securitizing some globalization on the other side would impact chips specifically?
My view is that CHIPS, given that it was passed with a bipartisan consensus, is going to be really durable. Why is that? Because when it comes to microelectronics, we're thinking about national security and economic security, and that's why so many folks rallied around it. So I think no matter what the administration looks like in the next 4 years or after that, there'll be a strong bipartisan consensus for CHIPS because it is a matter of national security that we produce some of these most advanced chips and some of the more mature chips that go into our defense and weapons systems. And so I think CHIPS is going to be just fine in terms of the political environment. I think the big question is execution risk, and that's something that we're going to need to watch going forward. I have confidence that they've done a good job up to this point, but we got to keep it up.